The macro landscape hasn't been this confusing in years. Inflation fears and job market scares are back, and the markets can't seem to decide if it's time to get giga bullish or go hibernate with the bears all winter. Hello and welcome to Milk Road Macro, the podcast that knows whether it's bull or bear markets, the real gains are the friends that we made along the way. I'm your host, John Gillen. Today is Wednesday, August 20th, and we are joined by the big gallon jug himself, Kyle Reidhead. Kyle is an entrepreneur focused on digital assets, media, and marketing. He's the co-owner of the Milk Road and the co-founder of Impact 3 Marketing. We've been fleshing out our macro framework here at Milk Road Macro. 2 weeks ago, we put out an episode laying out that framework, and I thought it would be a great idea to bring on Kyle to continue that conversation here. So if that sounds good to you, make sure you like and subscribe. Share this episode with someone who would enjoy it. And if you are not already subscribed to our Milk Road Macro newsletter, make sure you click the link in the show notes to get subscribed there. We break down everything that's going on in crypto, everything in macro that you need to know, get it straight to your inbox twice a week. Big news, big announcement. We are launching Milk Road Macro Pro. You'll get monthly macro reports, live AMAs, and direct access to our research team, the kind of stuff that hedge funds pay thousands of dollars for. This week only, get 25% off Milk Road Macro Pro, or if you want the full toolkit, macro, crypto, and Degen Pro, all access is 25% off. Link is below in the show notes. Today's episode is brought to you by Aura. Removes your personal info from the web before scammers get to it. And without further ado, welcome to Milk Road Macro, Kyle Reidhead. How are you doing?
I'm great, John. Happy to be here. I think on Twitter, we decided yesterday that we weren't going to do podcasts unless we have a sneaky beer. And I don't have a sneaky beer in front of me. So I'm trying to figure out what's going on here. I was lied to, I think.
Well, I've got a sneaky glass of water, so we'll have to make deal with that for today. So I wanted to begin this conversation. You know, we're laying out our framework for macro. Just start us off with what your macro framework is. What are your thoughts on macro, where we are right now in the markets?
Yeah, so I think zoomed out on like a more broader basis, I think everything you talked about in your first episode, I very much agree with on sort of the long-term time horizon, the long-term sort of like world that we're moving into. So for those of you that haven't listened to it, go check that one out. Maybe we'll link it in the show notes. I think that right now we're in a funny time. You like you said, are we in a bull market? Are we in a bear market? It's like everyone's kind of like, some people are thinking that we're at the top right now, or we're about to be at the top, and then some people think like we're going into basically like a super cycle. And I'm very bullish at the moment still, and I remain bullish. I think the famous words of is this time different? I do think that in terms of the last few cycles we've had, and I'm speaking more on crypto, but I think you can look at equities. It's all kind of the same. We've had these very like specific 4-year cycles, which have happened a lot because of monetary policy and rates. And I think that we're still in that world, except I think this time it's actually going to be extended for a number of reasons, which I'm sure we'll get into. A lot of it to do with the business cycle, where it's just sort of, it hasn't really ramped up to what we normally see. And so I think we still got a lot to go in this bull market. Of course, it will be choppy and we'll have ups and downs. We're in a down currently. And we've had these crazy ups and downs for the last few years. But I think overall, we've been in this kind of slow and steady grind upwards. And I just don't see that stopping this year. And so I think that this bull market will continue into 2026. And then we'll have to see, what the data shows in terms of how much longer. But for me, when I look at the data, I don't see a reason for us to be topping here, which seems to be picking up a little bit of steam on Twitter at the moment. I just think inflation, not so bad. Yes, it's on the rise, but it's just on the rise a little. So nothing to be overly concerned about. It's not like 2021 where it was ripping up to whatever we were at, 9%. Unemployment getting worse, but not crazy bad either. The economy looking pretty decent. I don't see any like concern of like a recession anytime soon. So things just continue to be like kicking along and don't seem too bad anywhere. Which to me just means, okay, as long as we continue to get adoption of new technology, then prices should go higher, at least in certain assets, not all assets. And I think we'll talk about that as well, sort of the K-shaped economy that's happening. But to me, everything seems to look pretty good. And I think, maybe we're not going to have our 2021 wild euphoric bull market like we had in those few months there. But I think we're just continue to go up and to the right over time here. So I think it's a good time to be in markets. That's for sure.
Yeah, appreciate that thought, that in the analysis there. I think I'm going to get euphoric no matter what happens personally. But okay, so I think that's a good overview, sort of like laying out where you see things from where we are right now. the Milk Road macro framework, we have three pillars of our framework that we laid out in the last episode: monetary, economic, and markets. So I thought it'd be kind of a good idea to kind of just like step through some of those, and we can kind of like pivot around as we see fit. Starting with monetary, I think obviously there's a lot of hubbub that's been made about whether or not the Fed is going to cut rates. I think there's a lot of other things to be paying attention to right now. I'm particularly interested in stablecoins and how the Secretary of the Treasury has been so focused on using stablecoins to increase demand for U.S. debt, U.S. dollars globally, and to really sort of fund the government through that. That's a huge pivot from the last administration. What are your thoughts on this generally? How is this changing the macro framework, and how do you see this playing out short term, long term? Like, what's the story there?
I think short term, I don't think that stablecoins are going to make much of a difference on the macro landscape. I know a lot of people are saying that stablecoins are having their chat GPT moment. I think that is overstating what's happening. I'm obviously super excited about stablecoins. I think it's a massive change to the world. It's very exciting for, globally. And so like, I'm obviously very bullish on stablecoins, but we got to remember ChatGPT went from like 0 to 100 million users in like, I don't know, was it like a week or something like that? Like something insane. That's not the rate of adoption of stablecoins right now. This is a much slower, a big deal, obviously. And we're at 270 billion in stablecoins. It's growing and it's growing pretty fast. We're getting a few billion every week, which is exciting to see. It's definitely not at a level of ChatGPT where it just changes the world in like one moment. So short term, like I don't think it makes a huge deal. However, over the next few years, especially with the new regulation that's come in, I think it's going to be a massive deal. I think what it's going to do is it's really going to proliferate the US dollar globally, which I mean, the US dollar already is, obviously the global reserve asset. It is the most, the currency that's used, the most around the world. But I think that's only going to pick that up even further and make it even more dominant. So I think one, that is really exciting. I think that it's going to make efficiencies in companies, whether that be financial companies or otherwise. I think it's going to make tons of efficiencies for humans, like for people around the world, because there's so much fees and kind of the slowness of moving money around the world right now that exists in sort of the traditional rails. And so I think that's going to kind of pick up the velocity of money, let's call it. Like if you think about what the internet did for information, that's kind of like what stablecoins are doing for dollars. And so they're going to move around the world at the speed of light and for basically free. Which is a huge deal. I mean, like right now, if I want to send money to Europe, I can fly to Europe with a briefcase of cash faster than I can send money online to Europe, which is just like insane in 2025. So I think for the velocity of money, that's going to pick up really well. I think it's a big unlock for a lot of people around the world who have inflating currencies, right? When you think of places like Argentina and Turkey and Lebanon, et cetera, I can like name tens and tens and maybe hundreds of currencies that are, inflating. And so I think it's a big deal for a lot of people around the world, but will it impact markets today, or let's call it in this cycle? I would say probably not going to make a huge deal, though. I guess the other big thing is, of course, you have Tether and Circle becoming the biggest buyers of U.S. Treasuries, which I do think will matter moving into sort of next year. Obviously, you have a lot of countries over the last little bit that have been becoming less of a buyer, let's call it, of these. And so we need someone to be able to buy them. Scott Bessent, that's his job, is he needs to sell treasuries. And he's sort of, I think that's why he's so bullish on stablecoins as well, as he knows that these guys are going to buy them. And so I think that'll just continue to pick up. But will it be a ChatGPT moment where everything changes tomorrow? I don't think so. I think it's too big of a change, right? There's too much going on there, and it's too integrated into so many different things that it can't just like happen overnight. It's not like a new app in the App Store. So I think it's just a gradual change, and it's not really something that's going to make a huge difference in terms of the markets in the coming year, let's call it.
Gotcha. Yeah, I definitely agree. And I think that's what's so interesting about it from a macro perspective, is that it does change, the calculus on the grand scale of things. It's been interesting to see how China and the European Union have both been responding to this as well. There's a lot of pressure on them to continue to get adoption for their currencies and to push on that as well. So yeah, I think it's definitely changed a lot of the macro backdrop for monetary policy, for the monetary system. Another thing I'll say about this, I think is interesting for our audience to just sort of pay attention to. Secretary Bessent does a lot of interviews, a lot more than Secretary Yellen used to do. One of the things he said recently was, when they say they want a strong dollar, they don't necessarily mean a strong dollar on the DXY. They mean a strong dollar in terms of global usage and adoption. So that, to me, plays into exactly what you're saying, which is like the strategy here is long-term adoption and use and I guess this, like traction around the dollar. it doesn't necessarily mean that they want the dollar to be super strong against all of the currencies. They just want to make sure that it stays in everybody's wallet. And I think that's a huge change macro-wise.
In fact, before Trump took over presidency, he said the dollar is way too strong. So did Besson. They both were, on TV saying we need to get the dollar lower, and they've done a hell of a job at that so far since being in office. And I think that there's still more for them to do in that regard. So I think the dollar continues to go lower. So I agree. Stablecoins aren't necessarily saving the dollar in terms of measuring it in the Dixie, but it is going to make it more of a dominant currency used around the world.
Awesome. Yeah. And I think we can kind of leave monetary there for the time being. I would say like we said at the beginning of this, there's some fears with the job market with inflation, but I don't think we're going to see any like radical policy change from the Fed, which was really what would move markets until one of those blows up. Speaking of blowing up, let's move on to the economic pillar and talk about that, because I think both of us have a lot of thoughts about this. I want to come to the business cycle and where we are in the market cycle. But first, you and I have been talking a lot, and I think a lot of analysts have been talking a lot about this K-shaped economy, which is like this idea that the hyperscalers, the Mag 7, the people who are really participating in and benefiting from all this investment in the AI arms race are seeing their earnings grow, their valuations grow to unprecedented levels. And then there's a whole other part of the economy that is not participating in that. We've seen, I think, near record bankruptcy filings that go back to 2008. We haven't seen filings this high. I think we're over 450 now in the United States. People are concerned that that's going to lead to a big explosion in unemployment. Tell me what you're seeing about this K-shaped economy. What are your thoughts on this? Is this like, a change in a paradigm we're just going to get used to? Is there a big risk that you see from this? What are your thoughts on this?
So I think we've had a K-shaped economy for a really long time, right? You've had this old world pre-internet, and then you have this new world when the internet came, and it was like anyone that was like building on the internet, they had these way more profitable companies. They were making way more in terms of salaries, and they were doing way better than the person who was working or living in kind of the old world, right? Worked at a bank, maybe did trades, or they worked, whatever, something in that's called the physical world. So that K-shaped economy has been happening for a long time. And then I guess the other way you would add that is those who hold assets, those who don't hold assets, right? If you look at since 2000, we've basically been in a crazy bull market. Yes, there's been the great financial crisis, there's been the COVID crisis, there's been bear markets in between. But like if you've been holding tech assets, things that have been growing at, exponential rates for the last 25 years, you've made a lot of wealth. And if you didn't hold those things, you haven't made a lot of wealth. And so there's this kind of two different worlds that are happening. And it's been going on for, I'd say 25 years, but that's just more my lifetime. I'm sure that this K-shaped economy thing maybe has happened even previous to that. And it's only picking up further, I think, right now. Since COVID, since the invention of AI, all this kind of stuff, since we've had more money printing, this is picking up even more because assets are going up much more. Technologies and companies are using more and more tech, and they're sort of accelerating exponentially, not just linearly, which means that they're becoming more and more profitable. They're becoming more and more bigger parts of the economy, of what people use and do every single day. And so their valuation of these companies, think Apple, Amazon, NVIDIA, et cetera, they're just becoming higher and higher and higher. Now we have like these are like $3 trillion companies. You couldn't even think of that 10 years ago. And so I think that trend is only going to continue. And AI is only going to make that trend accelerate and pick up. And so I think this K economy is not stopping, and it's only going to get, let's call it, worse. And so for those that hold assets, particularly in the tech world or in crypto, let's call it, or AI or the Mag 7, I think they're going to continue to do well, and these things will continue to go up because they are taking advantage of the big new technologies, the technologies that everyone in the world is beginning to use. And then those that don't use this stuff are going to continue to become zombie companies, right? Like you just talked about, there's more and more bankruptcies every year. Part of that's because there's more and more companies than we've ever seen, right? AI, the internet, it allows you to create more companies at a much cheaper rate. And so we have more companies today by a large margin than we ever did 20 years ago or 25 years ago or 50 years ago, right? And so do we have more bankruptcies? Yes, of course we will. We will always have more bankruptcies year over year for the most part in a long-term trend because we have more and more companies, right? And so the other thing I would say is like the data is getting really mixed here. And I think it's hard for a lot of people to wrap their heads around. So many people are so confused about like, why are the Mag 7 going up and then the 493 companies that exist in the S&P 500 are not going up? What's happening here? Is this a big problem? And many people think it is. And maybe it's a problem in some regard, but all I would say is like, there's a reason why those are going up and the others aren't. And it's because those are continue to be, as you said, the super scalers. They buy more companies, they create new products, they can launch more things. And so like, yes, we are going to this world where like good companies are consolidating and there's not so many of them anymore. And they're just going to get bigger and bigger and bigger and bigger. And I don't know what that means for the world. Maybe it's a good thing. Maybe it's a bad thing. Probably it's a bad thing because it means we've got to print a bunch of money for the rest of the world that doesn't have companies that can keep up with this. And so to me, I understand why. And then I guess there's one other thing to add to it is like the big companies in the world, if you think of Amazon and Apple and all them, they're not hiring a lot of humans anymore. They're using AI. And so like, it's not like growth in these companies isn't happening. It is. They are growing. They're becoming more and more profitable. So the fact that the prices of Mag 7 stocks is going up makes sense to me. Even though the data is a little bit weird, we're like, well, they're not hiring new people. Unemployment might be going up. You know, are we in this like bubble or are they overvalued? I don't think so. I think that the PE ratios and the valuation, these things are just going to keep going up and up and up like they have again for the last 25 years. The internet and then AI and even crypto, like we just talked about with stablecoins, it allows companies to get bigger and bigger and bigger and more efficient, more profitable. And so, of course, the valuations of these companies should go up. The problem is that most of the other companies in the world aren't using these technologies. They aren't, using AI. They're still doing it kind of the older way. And so those things need to fall off. Now, just like we saw with the internet, there was a bunch, and there still are a bunch of companies today that probably shouldn't be companies and shouldn't exist, but the government has bailed them out. We find ways to subsidize them and keep them around. And so I'm assuming the same thing will happen. My big thesis, and I think maybe, John, you share this as well, is the government isn't going to let all these companies and everything just blow up. They never will. It's not going to let the stock market blow up. They never will. Why? Well, because all the boomers, they've promised them their whole lives that if you just put your money into your 401ks or into, RRSPs is what we have here in Canada, and you put it into the stock market, we'll ensure that you have a pension. We'll ensure that you have money as you retire. And so basically every boomer in the world, which there's, that's the largest demographic we've ever had, all their net worth is either in their home or in the stock market. And so I tell you right now, there's no way that the government's going to let the stock market just blow up or let real estate blow up, right? So even if there's this confusing world of should they lower rates, even though we think maybe they should, maybe they shouldn't, doesn't really matter. They're probably going to do it because they just need to make sure that boomers are happy because they've told them their whole lives that they could retire and they'll be fine. And they can't just pull the rug from under them. So I just think this K-shaped economy is only going to get worse. It's been getting worse for many, many years. But I don't think it really matters because I think the government is just going to find ways to keep it, kicking the can down the road.
Oh, man. Pro tip, don't Google your name and city. I just did and instantly regretted it. They've got everything. My address, my email address, phone number. If you've ever wondered how scammers get your phone number or why your inbox is constantly flooded with spam, this is why. 24 hours a day, 7 days a week, data brokers are collecting and selling your information online all without your prior consent. And they're making billions of dollars doing it. Now, sure, they're legally required to remove your information if you ask, but they deliberately make that process as complicated and confusing as possible. That's why I just signed up with Aura. They take care of all the hard parts for me, automatically removing my information from these sites and, more importantly, keeping it off. Aura offers fraud and data leak alerts, $5 million in identity theft protection, a VPN, antivirus software, password manager, and round-the-clock US-based customer support all in one place. Try Aura free for 14 days. Go to milkroad.com/Aura. So I think that there's a lot to unpack in that. There's a long answer, but full of good insights and analysis. I'll say I agree that I think that the trend will continue. I wouldn't say get worse. It'll get worse for the people who are in the worst part, for the companies rather that are in the worst part. The trend's likely to continue. I'll say that the valuations on the Mag 7, the hyperscalers, the ones that are performing really well, their earnings are backing that up, right? And so I think that's something that's interesting to observe, is that although they are in overvaluation territories that are, exorbitant and by some measures are causing a lot of concern for investors, they're also having earnings come in and grow and outperforming their own earnings estimates. Exactly right. So that to me is a sign that, okay, maybe there is some real economic value there that's driving that, and that's going to support those valuations to continue. The problem is, as we said, that there's a whole enormous amount of not just companies, but people, right? Like there are a lot of jobs being created at these hyperscalers that are not necessarily for people. There are people employees and companies that are not participating in this and that are struggling to find ways to remain economically viable. That's a huge issue. I think that how that gets resolved is still not clear. I think that it's the hope that the rally will, as some analysts have said, broaden out to the rest of the market. To me, it's not really clear that that's what's going to happen. Really, what I'm anticipating more is a shock in unemployment that leads to a huge pivot in policy from the Fed, and that sort of like restores confidence and activity and broadens the bull run and restores the bull run to the rest of the economy. But in any event, I think it's something that we've talked about a lot. A lot of analysts have. I did an episode with Craig Shapiro of Milk Road Macro this week where we talked about this in detail. So I'd encourage people to go check that out as well. And we're going to continue to monitor this as we go forward with some of these things. Outside of that, right, the business cycle is something that we haven't really seen pick up, right? The ISM has not broken above 50. What's your view on where we are in the market cycles with this situation? Because I've heard a lot of different people say different things. I was on 2 podcasts this week. I heard somebody say we're in the first inning. Another person said we're in the 3rd inning. Another person said we're in the 7th inning of the bull run and the business cycle. So it's like everybody's all in different directions on this. Where's your head on that? And what do you think is going to happen with the cycle that we're in right now?
Yeah, it's a good question. I actually do you ever show the PMI? Let me just share screen. I'll pop that up for our viewers so they can see kind of what we're talking about here. I've got it handy here for you. So this is kind of the business cycle indicator, at least one of the ones that you can use. This is the PMI. And the weird thing that we've been in this cycle that hasn't really ever happened before is this PMI usually goes above 50 and then sustains it, right? And that's our bull market. So if you look here, 2020, 2021, we had this crazy bull market. 2016, 2017, crazy bull market. 2013, 2014, right? These are the bull markets we all know and love in the crypto world anyway. And then, of course, as the business cycle comes downwards and falls, that's when we go into these like pullbacks or bear markets, et cetera. We've been in a 3-year long sort of like up and down chop in the business cycle, which has never happened before. This is the longest we've ever been held down here I believe in history, or since the 60s or something like that. And so this to me tells me we are still early days in the business cycle, because I think at some point we will have this big shoot upwards. Maybe we don't, and it's just a grind upwards for good here, which would be a great thing for markets. It would mean just slow and steady, as I kind of talked about earlier, slow and steady up and to the right. I'm okay with that. I've been very happy over the last 3 years. As long as you've been holding things like Bitcoin and good assets make 7, you've done really well. It's when this shoots up is when we go super risk on and your altcoins do well, or your Russell, does well, and all the like early stage companies do well. And we haven't gotten there yet because the economy hasn't really been able to pick up. Why? Well, the dollar has been strong for many years, right? That's finally started to come down. We've had oil pretty high for many years. That's started to come down as well. And then we've had rates been really high and has kind of remained, and we haven't gone down so much. The dollar has started to come down finally. Oil has come down pretty much and should remain there. And then I think we have interest rates, which I think will start to come down. And so that to me tells me that this is going to more than likely start to pick up. Will it have this huge shoot like we saw in 2021? I don't know. That was because of a lot of money printing. But likely we should see it come much higher, at least above 50, and I would say sustain above 50. And I think that's coming. I think that's what we have to look forward to in Q4 and into 2026. And so I don't think it's early days in a bull market. Like, I don't think we've got a few years ahead of us by any means, but I do think by saying it's, inning 3-ish or inning 4-ish does kind of make sense. But the thing I would say is the last few innings tend to be pretty quick. And so in terms of timing, like I would say we're definitely 50% through what I would call this bull market. Whether you'd call it a cycle or not, I don't know what is the best word to call it these days. But I do think we are in for the economy picking up, probably due to continued, the dollar going down and interest rates beginning to go down, maybe starting in September. Looks like, an 85% chance it's going to happen now. So I do think that begins. And so I think the rest of the year and then early 2026 is going to be watching that PMI go much higher, into the high 50s. We'll see how high it goes. I don't know. Are they really going to cut rates down to 0? I have no idea. Are they going to print a bunch of money? Again, no idea. I know China probably is. I think they really need to. So I think there's just a lot of, I put out a poll yesterday and asked, are we at the top of the cycle right now? Or is it going to be at some point in Q4 of this year? Or is it going to be in 2026? 10% of people thought that we were already at the top. And I was like, wow, that's wild. I think there's no way we're at the top yet. I think we still need a lot of things to go up more before it starts to roll over. And I mean that in terms of liquidity. I mean that in terms of the business cycle. And so I don't see a lot of top signals right now. And I see this looking a little bit different. I know if you were to look at the 4 years previously, we should be ending around September, October, and that should be it. If, at least in the crypto world, that's how it would look. I don't think that's going to happen this time around. And so I think the business cycle is about to really pick up. And so that's kind of what I've been watching for the last few months.
Gotcha. Yeah, I think I'll also say, like, for our viewers, we're launching Milk Road Macro Pro, and we have a pro report coming out this weekend that gives, I think there's over 45 different charts we have in this that really walks through a lot of things related to liquidity conditions, the business cycle, labor markets, everything, to really kind of give people a much more in-depth overview of where we are. Because I think right now this moment in the market is marked by a lot of confusion, right? Like, some people think it's the top, some people think we haven't really started. And sort of what I think is really interesting is that whichever thesis you have, you can sort of find something to build that case, right? So I think getting that deep dive is really helpful right now. Yeah, I think, look, something we kind of said before a little bit about the K-shaped economy. The reason why it's so important to have the economy strong right now and to keep this running is because the administration, the Trump administration, views winning the AI race as a matter of national security. So they, like, in some sense, a bear market is a little bit outlawed right now, right? Like, we might have some things where they need to step in and steady the ship, but they can't really allow us to go into an economic recession or collapse. And China's in the same situation. Sorry, go ahead.
Yeah, I just wanted to say, and this kind of goes back to this, but then also back what we talked about before in terms of like what's happening with AI. You just said, the US wants to win the AI race. A lot of people are very afraid. I think that AI is going to take all the jobs. And I don't know if that's why you said that you think you said unemployment is going to skyrocket. I think the thing to understand is we are still many years away from AI taking away all the humans' jobs. To get AI to the point where it can take away our jobs, we have to do a lot of things first to get energy right, to get our hardware right, to get robotics right, to even just to get the processing and compute needed to get AI right. So there's just a lot of things that we still have to build globally in order for AI to kind of like succeed in its big promise. So I think we're still a long ways away from AI taking over everyone's jobs, and I think it's actually going to create a lot of new jobs first before it gets rid of jobs, which is, I mean, how technologies usually work as well. I just think for a long time we've been told you should go into software development. Right? You should go to school to be a developer and learn to code. That now I think is a really bad idea and unfortunate for all the kids that have done that over the last 10 years. I think now you need to go to school to be an engineer, a hardware engineer, right? Because there's so much that we have to build in terms of infrastructure to produce robots that can, actually take action with the AI that we're building, and to produce factories to be able to compute and process AI. So I think that is the route that Trump is trying to bring into the US. I don't think he's trying to like get iPhones made in America. They're never going to do that. It doesn't make any sense. But they're trying to bring in these huge factories, right? Which we're seeing already, these data factories and compute factories. And they're going to need a lot of employees in the US to do that. So I do think I think what people need to understand is the world is changing as it always is. And the data and the areas you used to look at are very different now, and it's going to continue to change. And so you need to keep updating what's the data that you look at, what are the sectors that you look at. There's just a lot that's always changing, and it's picking up and going faster and faster than probably it ever has before, right? Like, Trump is making moves that at a speed that I don't think any president's done for many, many years. So I just think people need to update their priors, update, what they're looking at, because the world is changing. And if you keep looking at the old world, then you kind of miss where the world is going, or maybe even where we somewhat already are. So I just want to make sure that's a clear point, because I think a lot of people miss that AI is just not going to take away all of our jobs. It's going to create a shit ton of jobs, at least for the next however many years.
Yeah. So I think there's a lot of wisdom in that. I'll say that something I've been trying to keep front and center for our audience in a lot of these podcast episodes has been this idea of being adaptable, flexible, and not being dogmatic about what must happen, but paying attention to what does happen, because every paradigm that you go through is different. Every macro environment, every economic environment is different. I think I've told you this in the past, Kyle, but I studied economics at the University of Virginia when I was in school, and in all of my questions when we had to like write out these long answers to things and show our work and everything, we always had to write ceteris paribus, which means all else being equal. In other words, the economic analysis you do only holds true if you hold all these other independent variables the same. But in real life, that's never the case, right? So like all of these economists, all these people who are doing this analysis, they're very likely, very well informed and educated and experienced, but they've experienced a lot of things that don't really apply to this environment because this is unprecedented in a lot of ways, right? So I think that's an important perspective to keep in mind, right? Like you want to take in information and perspectives from a lot of people, especially people who are experienced or experts, but then also be open to, saying like, hey, I just, keep taking it in as information, but don't get dogmatic about any of that. Okay, I wanted to, oh, sorry, you want to go ahead?
Well, I was just going to ask you a question. So I've kind of explained, I think, this cycle continues. We're still in, let's call it inning 4 or 5 or whatever you want to call it for the bull market. We still have the big part of this bull market left is my opinion. I'm curious if you agree with that. And if you do agree with that, help me try to take the other side of that, right? So what is the other side of like, hey, maybe we have topped, maybe the 10% that I had on Twitter were right. Walk me through, first your opinion, and then we can try to take the other side just to it's always good to play both sides.
So I think this is a great question. And I think it's important to do this, right? No matter what you think your thesis is, it's important to steel man the other side. I generally tend to agree with you that we have a lot more left of the bull run. There's a lot more catalysts still to come. The fundamental backdrop of the economic situation, particularly the digital asset space, has changed in a dramatically positive fashion. There's a lot of capital that's already earmarked to continue to come in. So these digital asset treasury companies, which I also want to ask you a little bit about, they have a lot of capital that's already been raised, and they're bringing in more capital all the time to support not only some of the bigger, assets like Bitcoin and Ethereum, but a lot of other ones as well. So I think there's a lot of reasons to remain bullish and to say that, hey, this probably isn't over. There's room to run here. I think this could carry us comfortably into Q1 of 2026. However, the problem with that is that anytime I find myself saying this time is different, I get very nervous and suspicious, and I like to stand in front of a mirror and explain it to myself until I feel stupid, right? But yeah, so I think that historically speaking, if you look at the prior liquidity cycles we've seen play out since 2008, a lot of them would seem to suggest that there's going to be some sort of a top, either a local or a macro top, sometime in fall between September and November, right? So that is something I'm watching carefully. And I think to me, it's going to depend on what I see in terms of market behavior, right? If we do see, like, say, for example, we see not a labor market collapse, but a spike in unemployment, that would indicate, hey, there's a strong risk of recession. That could pivot Fed policy really strongly in a bullish direction. And we could get some kind of like market sugar rush, euphoric spike. That could be a top or a local top at least. So I don't know exactly how I see all these things playing out, and I'm not going to go through all those things, but really what I'm watching for is what the market behavior is. If we continue to grind slowly without any sort of euphoric sugar rush, I'm going to kind of stick with the thesis that it seems like we're just in an elongated and structurally sound bull market that's going to continue to play out. If I wake up on Thanksgiving and Bitcoin's trading at $500,000, I'm probably going to take some profits. But that's just kind of how I'm going to play this. Yeah, but like to me, everybody is saying this time is different, and it is, but it also makes me nervous. And so that's just kind of my thinking on that. I don't know if that makes sense to you, but I'm always nervous when someone says this time is different.
Yeah. So I always like to take the contrarian take too. However, I don't think that everyone believes we're going into a bull market into 2026 yet. I don't think that is the I've seen a lot of people. Yeah, there's a lot of bears. There's been bears through this entire bull market we've had over the last 3 years, right? Like it's just nonstop bears. So it doesn't feel like 2021, when you had that kind of more euphoria moment, everyone was like, holy, this is the most bullish thing in the world. We're going to Valhalla, whatever, right? And we've just never had that moment yet, which is exactly that chart that I showed of the business cycle. When that business cycle really goes up, that means everyone's making money, right? And so like everyone's pumped, everyone's feeling good, they're buying Rolexes, and like everyone's just going ham, and we're just not there. And so that's why I think we have half the people think bull market continues, half the people think we're not in a bull market, and this thing's going to crash tomorrow. And so that's what makes me feel really good about continuing to think that there's still lots of room left. Once everyone is in agreement that we are in a bull market and like it's up only from here, that's when I'm okay, time to take the other side of it.
Makes sense. Thanks for that. I think that's an important thing to give the audience that context. I do want to pivot now to talk about the third pillar of the Milk Road macro framework, which is the market itself and market opportunities. I think you can kind of come at this any way you want. I wanted to kind of start by asking you your thoughts on digital asset treasury companies as they pertain to this particular market cycle and the opportunity there, because you're more so than most people I know very plugged into that space. Bitmine has accumulated a huge amount of ETH. Michael Saylor's getting some criticism now on Strategy's performance. Where do you think the digital asset treasury company phenomenon kind of plays into this market cycle? And do you still see that as a big opportunity? And just what are your thoughts on some of that right now?
Yeah, I think we had a bit of at least in the crypto world, a bit of a stunted cycle, let's call it last cycle, because of regulatory issues. And so a lot of institutions, a lot of capital that wanted to come into the space, whether it was allocating or building, et cetera, they weren't able to. And that actually got worse from 2022 to 2023, et cetera, with Biden, basically this choke point 2.0, and just not allowing this industry to flourish in the US at least, which also hindered the rest of the world, let's call it. When Gary Gensler was sort of kicked out was January of this year, and we sort of replaced the SEC, they became pro crypto. All of a sudden, everyone who's wanted to allocate or wanted to build or wanted to do something in crypto over the last however many years, they finally got the green light to do so. And we also got the market structure bill, the stablecoin bills, which have came about over just the last couple of months here, which are sort of not just giving the green light, but kind of giving rules and guidelines on how you can do it. And so I think this is a massive trend or tailwind for the crypto space. Now, of course, crypto is still only going to move based off of business cycle, liquidity, et cetera, that we talked about. But this is just a huge, let's call it like almost like a steroid for the crypto market. And I think it's the reason why these digital asset treasury companies have all come in so much over the last few months, is because Ethereum, Solana, all the others were basically thought of as security, and they were illegal to hold or to allocate to. And so none of them could do it. So we've had Strategy and MicroStrategy been doing this for 5 years now, right? Buying Bitcoin, taking public market capital, buying Bitcoin with it. To me, that's probably the reason why Bitcoin has outperformed the rest of the market so much over the last 3 years. And now, finally, we've opened up the door to all the other tokens, all the other smart contract platforms to be able to do this. And so I think the digital asset treasury companies are a big step for this, for crypto, for the industry, because it brings a lot of capital that exists in public markets that can't necessarily go on chain. Even though we've got the green light for crypto, we've got the green light to build in the space, there's still just a lot of capital in pension funds and endowment funds and sovereign wealth funds, et cetera, that just can't buy like an actual digital asset and custody it themselves. And so they could use ETFs, but again, there's also a lot of funds that aren't allowed to buy ETFs, but they are allowed to buy companies that exist on the NASDAQ. And so this is kind of this roundabout way for companies to allocate capital to Ethereum, to Solana, to Bitcoin even, and do it in a way that they're actually allowed to. And so I think that's only just getting started. Like SharpLink was the first. I think they've been at this for like, 2.5 months, maybe 3 months. Then you've got Tom Lee's been at it for about a month. The guy's already bought like, what is it, like 3 billion or something? I don't even know what the number is more today. 5 billion, 6 billion. Yeah, it's a lot. And I think they're still just getting started, right? Like they haven't really been able to unlock all the different ways that they can raise capital yet. Like if you look at MicroStrategy, he's got like 4 or 5 different like avenues now, or like capital assets that you can buy or allocate to in different ways. I think the ETH treasury companies, maybe the Solana ones, will all do that eventually as well, but it just takes some time to do that. And so I think there's still a lot of tailwinds left and demand left that's going to come from these treasury companies. And then I think even better is, especially like the ETH and Solana ones, they're going to go and deploy that capital in DeFi, in Ethereum and in Solana, which is going to teach, the Wall Street what not just Ethereum and Solana are all about, but also like what DeFi is all about and how you can do all the things on chain. And so I think there's just a lot of education, a lot of demand that's going to come from these companies. So I think it's a massive catalyst for the space. And I think it's still only just getting started, at least for ETH and Solana. Bitcoin, obviously, they've had it for 5 years. So like, I wouldn't say that's just getting started, but like the ETH and Solana ones still only exist in the US. There's still going to be ones in Japan and in other countries around the world, right? And they're still going to have these different financial assets that are going to come out. And so there's just a lot left, I think, in those, which combines with my thesis around, macro still being somewhat early in terms of the business cycle. And so that just means I think there's still a lot of room left for certain crypto assets to run.
Yeah, I think that this is a great Trojan horse way to sort of like turn Wall Street against itself, bring these assets in a vehicle and a wrapper that they're more familiar with. And then just like you said, the big unlock, I think, is bringing in capital that's going to be more sticky, more staying in the digital asset space, and then also educating a lot of new people who've never been involved before on how all this works and the advantages of it. So there's a lot of changes that come from that. Yeah,
I just want to add one more thing. My thinking around crypto and with AI and with the economy, we talked about this K-shaped economy where there's certain parts of the economy doing well. If you work in tech, if you run your own business in tech, you're doing really well. If you don't, you're basically getting crushed right now. And then it's like, if you're a company and you use AI, then you're probably doing really well. If you don't use AI, then you're kind of falling behind. And I think in crypto, there's also this sort of similar K-shaped thing where if you're one of the good companies, one of the good assets that is available in public markets like Ethereum and Solana we just talked about, your asset's probably going to do pretty well. But then there's a bunch of just crap that's been in the crypto space for many, many years that just has no adoption. They're not building anything new. You can't access them in public markets. And so I think they're not going to do as well, right? And so when the PMI and the business cycle really picks up, everything just goes up. But again, we haven't been in that world for, a long time, not since 2021. And so until that happens, until you see the PMI jump above like 55 or 60, you're going to continue to see this sort of K-shaped movement in stocks. Meg 7 will go up. The rest will just continue to die out. Crypto, the good assets like ETH and Solana and Bitcoin will continue to go up. The rest will continue to lag and die out. The same as what we're seeing in the economy with those that use tech and those that don't use tech. And so I just think until we get to like 0% rates and a bunch of money printing, if we even do that, which I don't know, and I'm not confident we are, then I think we'll continue to see this sort of K thing in each industry, which means that you need to be more strategic in where you invest and where you put your capital. It's not as like easy as it was in 2021, where you could just like close your eyes, put a blindfold on, and just buy anything and you do well. So it's a little bit of a different market than I think we've been used to than previous cycles.
Yeah, so this kind of you've kind of already answered a question I was going to ask, which was like, there used to be this alt season or version of alt season in the digital asset space where it was like everybody's a genius season, everything goes up and we all celebrate and get 10x, right? Now, like you said, it's more about who has fundamentals, what's a real quality project that has product market fit and actual revenues, actual users, and actual adoption. A lot of people have said that we've already gotten a major alt season. It's just been a digital asset treasury company season instead of alts. Do you think, and I think you can touch on this a little bit, but do you think there is still an alt season to come, or is alt seasons we've known it a thing of the past? Like, what are your thoughts on that?
Yeah, this is the thing I'm not 100% sure of. It depends. If the business cycle really picks up and we do get, 55, 60 in the PMI or then I think, yes, we probably will. But again, that's going to take a lot for it to happen. And as we've talked about, when we talk about this K-shaped economy, again, there's like, whatever percent, 10% of the economy has money and is willing to invest and the rest doesn't. And in an altcoin season, you need everyone. You need the retail people to have money and be able to invest. And unfortunately, that's not the world we live in today. And I don't know what necessarily makes that unless we start to give handouts or we do bring interest rates. Like if we bring interest rates much, much, much lower over the next few months, then yeah, I mean, most people who own houses, it's going to be a lot cheaper to own their car and to own their house. And so they're going to have extra cash. We just don't have that world right now. The demand that we do have, the reason why crypto continues to go up is because you have public markets, you have the institutions and the funds, the ones that are already going to allocate, you have them being able to allocate to these assets. So that's why the good assets are going up. And when you said altcoin season, there's also there's been an altcoin season, not just in treasury companies, but also just in crypto equities, right? Because again, we don't need retail to buy Coinbase and Robinhood and to buy Bullish and Circle. We just need, where the capital already is, the institutions to do it. And they've been doing that. We've seen that already over the last little while here. So there's been demand for crypto. It's just not from all the retail people, the millions of less wealthy people that are coming in to gamble and just have fun like they did in 2021 or 2017. That's what you need. You need those people to come in to have this crazy altcoin season that we're used to in the crypto world. I don't know when or if that will happen. I'm unsure. Which is why I continue to say I think you need to be a lot more strategic in where you're investing this time around, because we're not really having that. We're going to need to see a lot of money being printed, handouts, or interest rates going much, much, much lower to get that crazy altcoin season everyone's hoping for. Now, that doesn't mean altcoins won't do well. Some of them will, because some of them are starting to actually get real fundamental adoption, right? There are DeFi protocols that are finally breaking out into mainstream, and I think that's really, really exciting. And so those assets should continue to do well, but it's because they're making a ton of revenue. But, most things in crypto, just like most stocks in the world, are basically zombie stocks, right? And so, no, I don't think they're going to do good unless you have a bunch of retail that has extra money, and that's not happening today. And I don't see that happening anytime soon.
Gotcha. Yeah, no, I think it's wise. I think there's a lot of people, a lot of analysts that I'm hearing are trying to be heroes and calling the top or calling the bottom, and like they want to act like they have some clairvoyance and insight. But I think your answer to this question was I think the right answer, which is it depends, right? And I think that mindset of being open to like what the market tells you is like a really important takeaway for the audience, and something that I think is a big focus for us here. Yeah, it plays out in so many different ways. Because like for myself, coming into the macro space to lead this podcast, there's a lot of macro content that is just bearish analytics that make you sound really smart and flaunt your erudition, but aren't necessarily tied to reality, and doesn't necessarily mean that the market's not going to just keep being bullish, right? So, yeah, I think that's an important thing to remember. There was a study that came out. This is a little bit off topic, but I think just on this third pillar of the market opportunities and how people think about this caught my eye. I think it was a JP Morgan study, but they said like from the year 2000 up to 2022, the average investor made about a 3% return. And over the same period, the S&P 500 return was around 9%. And the debasement of the dollar was about 4%. So on average, since 2000, most investors have lost value against the dollar and radically underperformed the S&P 500. I think there's a lot of reasons for this. I think the big one, though, I think is that people overtrade their book. They get bearish. They get out of the market. And so if you're worried about, are we going to top or not, just also bear in mind that there's a big risk to not participating in this on the macro trend, right? Like there's a reason why buy and hold is a good strategy, because over the macro, that's what matters. The big picture, you not participating is a big risk. So I think that's just something to pay attention to as you think about the markets.
Well, from those stats, John, my analysis from that is that it must mean that most people are not subscribed to Milk Road Pro. Otherwise, they would be beating the market. You would be beating funds. You would be beating debasement of currency. But if you're not subscribed to Milk Road Pro, and now we have Milk Road Macro Pro to add even more value to that subscription, then I don't know what you're doing. You must be lost out there. But like you said, if you're a subscriber, a pro subscriber, you're going to get all the things you need to make sure that you can handle these markets. And buy and hold is definitely a good tip.
Okay, so to tie this together, on the terms of the monetary system, there's a lot of changes there to keep the dollar strong. So watch that as that continues to grow. I think I would also say in terms of monetary things that aren't currency, gold and Bitcoin have been very strong. We probably expect those to continue to be. In terms of the economy, we've seen this K-shaped trend. As Kyle pointed out, I think really insightfully, it has been a trend in the economy for a long time. It's getting more exacerbated as we move into this AI race. So continue to look for opportunities there. Try not to think about all of the crises that are going to come from it, but look for the ways you can use it to empower yourself and to guide your investments, and just play that trend to your strengths. And then as the market plays out, right, like we have to pay attention. This is why we have community. This is why we have the pro subscription service, and why we pay attention and create this content, so we can get smarter together and stay on the right side of the market as it moves forward here. Kyle, any final thoughts, anything to add to that? Anything else you want to share with us from the macro perspective today?
Yeah, one thing I was just going to say is I know everyone's so worried about trying to find the top. And I think it's because, at least in the crypto space, people are so worried about the 80% pullbacks that we've had in the past when, after the top occurs. And I think the one thing to remember is like the way that we have been grinding upwards isn't really setting up for like an 80% pullback. You get an 80% pullback when you have like so for example, last cycle in 2020, 2021, in 6 months, Bitcoin went up 500%. Right, it went from $10,000 in I think September, October to like almost 60,000 by May. Right, so those kind of moves, those are the euphoric moves that we were talking about earlier, that could create crazy pullbacks. Right, we haven't had that, and so to get this like huge, massive like pullback where it's 70% or whatever, let's say we even get that, you need these big euphoric bull markets. And again, we haven't had that. And so you don't necessarily need to even be too worried about a crazy pullback. You should expect pullbacks. We are going to have 20, 30% pullbacks, maybe 40% pullbacks in things like Bitcoin and ETH all the time. You should expect that multiple times a year. We've literally had it 2 or 3 times every year for this entire bull market we've been in. Right. And so like that should be expected, and you don't need to trade around that. And so like that shouldn't worry you too much. it's when things go and they triple in price in a matter of weeks and it's already $1 trillion asset, that's when you're like, okay, now this thing is something I might need to take profits on and get out of, because a pullback is going to mean something more than 20% now, right? And so I just think we are all glued to the 2021 cycle, and we tend to have a bias towards that, thinking that same thing's going to happen. And like right now, we're not set up for a world for that to happen. Maybe it will. But right now, as we've both John and I have said, like we haven't had that euphoric craziness where everyone has gone risk on. And so I'm actually less worried about finding the top right now, because I'm just continuing to accumulate. You only want to stop accumulating and start, worrying about that when things get too crazy. And we haven't gotten there. We've had no sustainable craziness. We've had weeks or days of craziness, but that's about it.
Kyle, thanks so much for being here. This was really great. I enjoyed this a lot. Thank you.
Thanks for having me. This is fun.
All right. Thank you, everyone, for joining us today on Milk Road Macro. Until next time, everyone, stay safe, stay informed, stay bullish, and we will see you next time on Milk Road Macro. Thanks for being here. Bye. Want insights on what's really moving markets and how we're trading each event? Subscribe to our channel, then join the Milk Road Macro and Macro Pro newsletters. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.